All right, you're welcome once again to this wonderful section where we want to do a continuation of our candlestick analysis, part two. And I guess you wonderfully grabbed something from our last week webinar that we did on candlestick analysis. And this is just a follow-up of what we did last week, which is the part two of the candlestick analysis. And I am no other person but Mr. Shedrack, the financial analyst for DB Investing Nigeria. And this webinar, of course, is brought to you by DB Investing. DB Investing is a global brand, is a broker that is one of the best in the world. And of course, if you're going to do perfectly okay in the financial industry, the window or the door through which you come through is very key. The platform, by that I mean the platform you're using. And so DB Investing is one of the top-notch platforms you can use to trade the financial market. And so, because one of the things you must understand, apart from strategy, a good trading platform is also key to your success in the industry. So today, as we have said earlier, we just want to have a time to look into our candlestick analysis part two. Understanding the candlestick actually is very key because, like as I've said earlier, that the candlestick is not just a graphical presentation of the market, it is also a language. So it gives us a graphical view of the market, at the same time telling us, communicating to us of what the market is doing and what the market may likely do next. Okay, for instance, like in our last study, we looked at the hammer, and I said that the hammer in the original Japanese language simply means that the market is grounded. Okay, so these particular candlesticks are actually sign languages. Okay, sign language, trying to let you understand what the market is doing. So understanding the candlestick, therefore, is very, very key to your success in the financial trading. So let's push down to what we have for today. So today, we will be looking at double candlestick patterns. Last week, we discussed about single candlestick patterns. And then, so today we are going to do a continuation, and we are going to be looking at double candlestick patterns and triple candlestick pattern. Now, candlestick patterns that are formed by the combination of two candlesticks, okay? So in the case of the one we studied last week, we looked at candlestick pattern, single candlestick pattern, like you talk about your doji, you talk about your spinning top, all right? You talk about the hammer, okay? You talk about the shooting star and all of this. These are just single candlesticks. So now we are looking at when two candles combine to give us a pattern, okay? And of course, you know that all candlestick patterns are reversal patterns. I repeat, all candlestick patterns are reversal patterns. So in the case of double candlestick patterns, we will be looking at, number one, bullish engulfing pattern. Number two, bearish engulfing pattern. Number three, tweezer top and tweezer bottom. So these are the ones we'll be concentrating on in the case of double candlestick patterns. Okay, so let's go into the first case as per the bullish engulfing. So let's push it. Now, when it comes to bullish engulfing, in the case of bullish engulfing, we are looking at a scenario where the bulls seems to take over the market. And how do we identify a case where the bull have taken over the market? You know, in the market, we have the bulls, we have the bears. The bears are the one that tends to push the market downwards, that is sell. The bulls are the ones that tend to push the market upwards, that is buy. Now, if the market is under a bullish influence, how do we know that the bulls have come in to take over the market? There are several ways we can know. And one of the patterns that will form to enable us to know that the bulls have actually come in to take over the market is a bullish engulfing pattern that will be formed. Sometimes someone wants to take a trade. And at that trade you want to take, you are like, okay, maybe the trade is actually coming downwards, okay? You can see that the market is coming downwards. And it gets to a certain point here. And at that point, you are anticipating, will this market begin to rise from here? Okay, so what some persons do, they will have to look for, fine, maybe their strategy has confirmed that from this particular point, there is a very strong support level. And at this particular support level, I'm anticipating that this market will begin to rise from here. Now, some persons, we have to wait for a candlestick formation or pattern of a reversal pattern for a confirmation or as an additional confluence. So one of the candlestick patterns one may begin to look into is, can I find a bullish engulfing candle pattern around here that is confirming to me that this market is reversing here up to the upside? Okay, so that is why we want to look at the bullish engulfing. Now listen, in the case of the bullish engulfing, we are looking at a scenario where a bull candle like this one, you see this is a bull candle, we are using green to talk about a bull candle, swallows up the bear candle. We are using red to present a red, the red bear candle, okay? You can see that this bull candle covers this bear. It swallows it up, it overshadows it. When we have a scenario like this is what we say the bullish candle is engulfing the bearish candle. The bullish candle is covering the bearish candle. And that shows that the bulls have more power now. The bulls are more now, okay? The bulls are like more powerful and impulsive now over the bears. And like I've earlier said, all candlestick patterns are reversal patterns. So that's about bullish engulfing candle. So similarly, the same is true for the bearish engulfing. Okay, yeah, for the bearish engulfing, you can see that the case of the bearish engulfing, the bear candle seems to swallow up the bullish candle. Now, this is a case when we have a scenario, the market is on a rise, okay, and then on getting to a certain point in the rising of this market, now we are expecting this market to reverse, okay, to the downside, that is to sell, and then it is accompanied by a bearish engulfing candle rather, okay? Then we know that, okay, fine, this is a confirmation candle, okay, trying to let us understand, okay, fine, this market wants to go in the downside. So at the close of this particular bearish candle, the next market candle opening, you can begin to think about to short that market. But some may also still wait for another confirmation bearish candle closing before they come in to short the market for itself. So, but now this market has come to a particular point. Let's say we have a resistance zone here, and then after the resistance zone is accompanied by a bearish engulfing pattern. Then we can begin to think about that this market probably wants to reverse from that point. Okay, so that is that about the bearish engulfing. So the bear candle engulfing the bullish candle. Okay, and I will advise that you seek for these patterns at the top of a trend for the bearish engulfing and at the bottom of a trend for a bullish engulfing. Don't seek for these patterns at the middle of the trend. Okay, yes, at the middle of the trend. Seek for it better off at the top and at the bottom of a trend. They are more powerful at those zones, especially when they are leaning on a support or a strong resistance zone. All right, now let's push on and see other candlestick patterns. Let's see the case of the tweezer top. Now the tweezer top or the tweezer bottom is also another very powerful candlestick patterns that we have to take cognizance of. Sometimes, I don't know if you're very observant in the market, of which I expect that every good forex trader should be very, very observant and then know exactly what the market is doing. Sometimes you discover that they're like twin candles. The candlestick just have equal height or equal width level, and it seems to as if they just they size the both of them, like the case of this. Sometimes it could be equal widths, sometimes it could be equal bodies. Okay? Now, if this kind of pattern like this is formed at the top of a trend, it is called a tweezer top. Is that okay? At the top of a trend, it is called a tweezer top. Now, it's a reversal pattern that this market from this point wants to go to the downside. The colors of the candles is immaterial. Okay? You could see in the case of this one that the wicks are of equal length. Okay? Of equal length. Sometimes it could be of equal length, the wicks, and then the body, they're closing. Their bodies also at the bottom, okay, of equal depths also. All right, so that is what we call a tweezer top. Now, why we call it a tweezer top is because it is found at the top of a trend. Okay, that's why it's called a tweezer top. So whenever we find that the market is rising, and then we now find something like it, I do call them twin candles. But they are sometimes of equal height, equal body size, height, either the width or their body. Okay, I do call it, they are like twins, right? If you find that kind of candle at the top of the trend, then that may be a clue that this market wants to go reverse on the downside. But again, once you find it like this, wait for the next candle that we form, which is this one, if it will close as a bearish candle for the tweezer top. If it closes as a bearish candle, then this could be a confirmation candle where we can come into top this market and then maybe put our stop just above this level. But like I said, these patterns are more powerful at the top of a trend and at the bottom of the trend, especially when the market have extended to a great deal and is in a very strong resistance zone or a support level. Okay, so if the market has come to a very strong support zone or resistance zone, and you can now begin to check for these patterns for a confirmation of reversal at that particular zone, at that particular level. So that is how this goes on. Okay, so the same is similar. The same pattern for similarly is true, or the same is true for the tweezer bottom. All right. So this is the tweezer bottom. But before then, let's see. For the characteristics of a tweezer top is that number one, there must be an existing upward trend. Like I earlier said, these things are powerful at an uptrend. Okay, so there must be an existing uptrend. A first candle for the tweezer top should be bullish. All right. Yes, in the sense that there's an existing uptrend. The first candle is bullish, and then if the first candle is bullish, then it is now accompanied by a second candle that is bearish. But they are like twin, just like the twin tower. All right. Sometimes this what's it called, tweezer top could be like a marabuzu, a twin, full flesh body candle, up, bullish, down, bearish, like a twin tower. Sometimes they could be spinning top, twin spinning top. Okay, but they are twin. They always come in twin, in pairs, like a twin, identical. Right. Now, the shadow of the candlestick should be of equal length. That is, their widths should be of equal length. The tweezer top should have same height. So their height should be same. The shadow should be same. But there are some tweezer tops that does not have a shadow. Like they could be marabuzu, two twin marabuzu. Okay, there are several of them. All right, so these are just examples. Like I earlier said, that check out for these patterns at the top of a trend or at the bottom of a trend. Okay, let's go. Now let's look at the tweezer bottom. The same is similar. Okay, the first candle will be a bearish candle. Second, a bullish. All right, but equal high. Look at their candle, the width of equal length. The height is same. All right, and then you can see it here. Let me show it critically. I'm talking about the height of their widths. And if you look again, sometimes even their body here be of the same equal leveling. Is that okay? So this is what they call, they just understand that when it comes to tweezer top and bottom, they are like twin tower. Just remember the word twin tower of equal height. Okay, that is it. If you remember that, I can easily catch it. And also remember that if it is found at the bottom of a trend or at the top of a trend, they always appear there. And it's a sign of a trend reversal. All right. So that's about tweezer bottom and top. Like I try to remind us again that all candlestick patterns are reversal patterns. They are not continuation patterns. They are reversal patterns. Okay, so the next we are going to, because it's important you understand these candlestick patterns critically, because if you don't, sometimes you have a strategy and the strategy has given a confirmation that, okay, this market is going for a sell or for a buy right now, but you are confused. You're still like, how am I sure this is a sell? So these candlestick patterns can give you an additional confluence or confirmation. And don't use candlestick patterns alone. I've said it before. Okay, you must use it in addition to other strategy or confluences. Okay, you can use them to confirm each other. That, okay, for instance, I see a tweezer top, I see a tweezer bottom. Fine. I have to still look if other patterns are confirming, maybe chart patterns like a double top, bottom, head and shoulder, whatever, is also saying that this tweezer top that is telling us that this market will reverse is also the same with what the chart pattern is saying. If the chart pattern said so, check trend line patterns, check if it is a break of trend line, all of these things, confluences. When I have 3 to 4 confluences telling me that this thing is a buy, then I can take a trading decision on that regard. Is that okay? So that is how we trade the financial market. So we're not just going to waste time. So we just finished the double candlestick pattern, and we want to look also at the triple candlestick pattern. And so on the triple candlestick patterns here, we are considering a scenario where 3 candlesticks are placed side by side to form a particular unique pattern. And whenever we see those kind of display or array of candles, we now know that this is what the market wants to do. Is that okay? So, like we went from the single to the double, to the double, to the triple. Now, under the triple, we'll be looking at number 1, the morning star. Number 2, the evening star. Number 3, we are looking at the 3 white soldiers. Number 4, the 3 black scrolls. Number 5, the inside up, 3 inside up. Number 6, 3 inside down. So let's quickly look at these formations. These things are important in trading. It's good you know them at the fingertips, so that when you are taking any trade, maybe it has broken a trend line, and then you now see this pattern and this market, this is a confirmation that it's going to drop down, and then you just take your trade. So it's important you know all of these candlestick patterns. So let's go to the next one. Morning star. In the case of a morning star, let's see the characteristics first, if we have the characteristics. Okay. In the case of a morning star, morning stars are usually found, it's just like the sun rising up in the morning. Okay? The sun rises. So in the case of the morning star, it is usually found at the bottom of a downtrend. And then in this case, first you will see a very full bearish candle like this, at least as a good impulsive bearish candle. Then If this bearish candle is accompanied by a candle that has a very small body, it might be a spinning top, it might be just a normal candle, but the size of the body is not that very impulsive, very small body candle. Now it shows that momentum is dropping. It might be any color. As in the what's it called? The candle at the middle here. It can be any color. Okay, but most times if it is a bullish, it is more effective. So we have this. All right. Now, when we have an impulsive bearish candle like this, after the impulsive bearish candle, we now see another candle that follows up where the impulse have dropped. The body of that candle is a small body, like a spinning top. And then next, we now see another impulsive candle, bullish candle, that seems to swallow up this other one, or just an impulsive big candle that closes up. This particular pattern could be looked at as a morning star and as a reversal pattern. Okay, so here this is the impulsive bearish, but after this impulsive bearish, we are expecting that we will see another impulsive bearish candle downwards again, but we did not see. Rather, we saw a small bodied candle, okay, and telling you that impulse is dropping. And then after that small body candle, we see an impulsive candle that goes up in the opposite direction. This shows that this market is reversing to the upside. This is the characteristics of a morning star. Okay, so a morning star is a combination of three candles. One, a bearish, followed by a loss of momentum candle, which could be a spinning top or just a small body candle. Then another momentum candle following up, a bullish momentum candle. When we have that kind of a formation like that, that is called a morning star. Okay? Yeah. So once at the close of this particular one, we can begin to come into this market for a buy movement. That's a morning star. So let's go to the next, the evening star. Just the opposite. Is that okay? You can see what we're talking about. The evening star is the same thing. We have evening stars are usually found at the top of a trend. That this must be having a buy movement. So this is an impulsive bullish candle. But this impulsive bullish candle is immediately followed by a small bodied candle, which indicates a loss of momentum. Is that okay? So here we have a candle that indicates that there is a loss of momentum to the upside. And then immediately after this candle, we now see a momentum candle to the downside. This shows that this market probably is reversing down to the downside. And this is a evening star. These are the characteristics or the behavior of an evening star. So if we have a very strong resistance zone here, and on that resistance zone, we now find this candlestick pattern, at least that will give you a confidence that this market wants to drop to the downside. Is that okay? Very easy, very simple, very clear. Okay, so let's go to the next. The next we are going to look down the line is called the three white soldiers. Now, this is very simple. This is very key. Have you ever noticed where a market is selling or buying and you just see three impulsive bullish candles at a row? Pop, pop. I guess so many of us will have seen it. That is pop, 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 three. There is no in between, like we are having one, maybe one was a bearish candle trying to come down, and then it goes up again. No, just three impulsive bullish candles just in a row. Now, when we see that kind of a pattern, it's a very strong impulsive buy movement. That is what they call the three white soldiers. Okay, all right. It could be the other side of it as per the downside, which we'll look at, like the three black crows. In the case of the downside, we call them the crows. You see three impulsive bearish candles, pop, pop, pop. Okay, at the close of the third, we can begin to think about to short that market. Okay, so that is it. So it is a very important candle. This shows that there's a very strong momentum in the upside or in the downside. Don't joke with this pattern, please. So this one is called the three black crows, or when it talks about, when you are looking at it in the bullish direction, it's called the three white soldiers. Is that okay? So that is that about this. I don't want to waste much time because I want to ensure that I do everything within the limit of 1 hour, okay, for your benefit so that you will not be tired with this lecture. Okay. Then we also have the three inside ups, inside up. Okay, now this three inside up is similar to bullish engulfing. Now let me explain. Here, now if you watch this carefully, sometimes you can see two patterns in one. Like here, we can have the three white soldiers. At the same time, we are also having the three inside up. Okay, you can have a single candlestick pattern at the same time, have a double candlestick pattern, all in just one setup. So you can have more than one setup in just one particular setup, if you understand what I mean. Now, watch this. If you watch this particular candle critically, this is a bearish candle, right? Watch, just listen. Now, this is a bullish candle. We cannot call this a bullish engulfing candle because the bearish candle seems to be more, or seems to be bigger, or have a bigger body than the bullish candle. But if after this bullish candle, another bullish candle forms, of which the height of it is now covers up this bearish candle. Now, if we join this and this, their height now swallows up this bullish candle. This can also be looked at, so this bearish candle rather, this can also be looked at as a form of bullish engulfing candle. But this time around, it takes two candles, two bullish candles to cover up, to swallow up the bearish candle. That is what we call the three inside up. When it takes two bullish candles to swallow up a bearish candle like this, that pattern is called three inside up. It is a candlestick pattern that tells you that this market is just similar to like the bullish engulfing. All right. This is another type of a bullish engulfing. But here in this case, it takes two bullish candles to swallow up the bearish candle. That is what they call the three inside. Is that very clear? Okay. Now, so once that pattern is formed and closed, the next candle opening from here, we can begin to push in for a buying market. Okay. Now, let's look at the other one. Okay. So that is that about the three black crows and we have talked about this, and the three inside up. Okay, the same is similar for the downside. We are talking about the bearish candle. We have an impulsive, let's say we have an impulsive bullish candle, all right, an impulsive bullish candle here. We have an impulsive bullish candle like this, for instance, and then we have this bearish candle that came up to this point. But this bearish candle did not swallow up the bullish candle. They will now have another bearish candle that tends to come below this impulsive bullish candle. Okay, this one is also what is known as three inside down. Okay, this is the case for the bearish. So it's similar to bearish engulfing candle. So what we're trying to say is that when two bearish candles swallows up a bullish candle, can look at three inside down. When two bullish candles swallows up a bearish candle, It's called a 3 inside up. Okay, so that is how this market, these candlestick patterns are. So, ladies and gentlemen, from this, you can see that it is quite very easy. And this, as I earlier said, this will just help you for as a confirmation to know which particular candlestick, to help you to confirm if a particular market is about reversing to the upside or to the downside. So when you are trading the financial market and the market comes to a very strong support or resistance zone or a demand zone, the next thing to look out for is for these candlestick patterns forming at that support or resistance zone, which will validate your entry in the market, whether to the upside or to the downside. I guess this makes sense to us that candlestick patterns are very key if we must be successful in our financial trading. Thank you so very much, guys. And I believe this particular section we have had is going to help us actualize our dream in the financial industry. And once again, this is brought to you by DB Investing. And DB Investing is a powerful broker that you need to use to actualize your dream. And this is me, no other person but Shadrach Debabo, your humble, reliable financial analyst, DB Investing Nigeria. Bye-bye.